Hi, everybody. It's great to be here. Thanks for the introduction, Alex. For those of you who haven't heard the joke about how you value a company, it's essentially the number of engineers times 250,000 minus the number of MBAs times 1,000,000. So you just multiply that even more when one of the founders is an MBA. So I'm thrilled to be here. I'm CEO of a company called Borrowell. We do online lending for consumers with good credit. And we also do something else that I'll talk about in my talk. And what I want to talk about tonight is building consumer trust and how and our journey from doing that maybe not so well to doing it a bit better. And hopefully what I talk about will resonate, and maybe other people in the audience who have similar stories. So we started out about 2 years ago now, a year and a half ago now, connecting investors with borrowers. So we connect investors, like we have 2 Schedule I banks on our platform, and we have family offices on our platform. We connect them with borrowers who want to borrow money. And typically, why do people want to borrow money from us? Well, they're carrying debt on credit card. And credit card debt in Canada is a big issue. There's about $85 billion of credit card debt. And credit card debt is a really funny thing. I bet all of you in this room who have a credit card pay about the same amount of interest. Everybody pays about 20% on credit card, unless you have a store card, in which case you pay even more. You can pay 30% interest. And so credit card debt is really strange. I mean, if you think about car insurance, I'm sure we all pay different rates. Some of you may be better drivers than I am, so you'd pay less money. Well, credit cards don't work like that. Whether you have a good credit history or a bad credit history, chances are you pay the same rate. And about 40% of people that have credit cards carry a balance from time to time. Why do they do that? Well, the alternatives aren't great. You have to go into a branch, apply, bring in paperwork. That can be really intimidating and take a long time. So what we do is very simple. We try to find the people who are carrying credit card debt, who have great credit histories, and give them loans at a lower rate using a very easy product. So how big of a challenge is this? Well, there's about $85 billion of credit card debt in Canada alone. So this is a really, really large addressable market. I mentioned how easy our process is. This is essentially our application process. It's one page. You put in your name and your address, and we'll tell you instantly whether you qualify for a loan. A funny story about our application process, we work really hard to make this fast. And a lot is happening in the background after you say, get my rate. We're checking your credit profile. We're downloading about 1,500 data points from Equifax on your credit history to make a decision. And ironically, we actually found as we were doing this that many people who wouldn't take a loan, we'd call them and we would say, why didn't you take a loan with us? And we heard over and over, well, the process was so fast, it just seemed like a scam. You couldn't have actually been checking my credit. So we actually inserted a little spinner that takes about 4 or 5 seconds after you click submit that says checking your credit, generating offers. So you can actually be too fast in FinTech. Now, as we launched this product a year and a half ago, we thought this would be a slam dunk. Who's ever had the experience of launching a product and thinking, boy, this is going to be a slam dunk? Hopefully, some of you will keep your hands up when I ask, and did it work out to actually be a slam dunk? Because we know there's a huge addressable market. We know this is a real problem. But ironically, we found that while there are many, many Canadians out there who would qualify for our product, it wasn't always those Canadians who were applying. So this is a chart of the distribution of credit scores in Canada. This is the sort of the one, quanty, nerdy chart in the presentation. So get your fill if that's kind of what you're into. So as you can see on the right-hand side of the chart, as the credit scores get higher, that's better credit. And the vertical black line is our cutoff. So if you're to the left of the black line, you don't qualify. So the vast majority of people in Canada qualify for our product. But the funny thing is, if you've got a low credit score, do you think you apply for loans more often or less often than average? You apply for loans more often. That's probably one of the reasons you've got a bad credit score, because you're applying for credit all over the place. What we were finding is, even though 80+% of Canadians would qualify, the application ratio was almost inverted. We'd have a huge percentage of our applicants not qualifying because they were below our credit score cutoff. So what we thought would be sort of an easy customer acquisition problem actually was hard, because it costs us money, of course, every time someone applies. So what we spent a lot of time thinking about was, well, how do we get in front of people with better credit? And we've of course tried marketing, tools like Facebook. We've thought a lot about what channels do we go through, where do you find people with good credit. And then eventually we came across an even better idea. How about we develop a channel that's sort of defined by the quality of someone's credit score. But before I get there, let me just give you a sampling of what we found. So we would get comments like this on Facebook. I know 3 people that tried this and we all had the same response: nothing can be offered. And the problem is many people don't know what their credit score is. So we would have people calling us saying things like, I've got great credit, why didn't you approve me? And we'd be looking at their file being like, you have 7 bankruptcies, we're not going to approve you for a loan. But people didn't know that. So over a period of time, we thought a lot about this, and we came up with a solution. We said, why don't we give people the ability to get their credit score with us before we even start the loan conversation? So how can we be helpful to people that don't know what their credit is, which is a much wider universe than people who want loans? Well, why don't we try to give people something of value, and we'll give them their credit score. And so in June, we launched this product, or this channel for us. We think about it both ways. And that's the ability to get your credit score for free. And who in the room has done this from us? That's great. Well, thanks a lot for those who have done it. I hope you had a good experience. For those of you who haven't done it, I would highly recommend you do it. It takes about, it's instantaneous. You can do it on your phone. You can do it at home. It doesn't cost you anything, and it won't affect your credit score to check your credit score. And whether your credit score is high or low, we'll give you tips for how you can improve it. So we've had a great response to this product. It's really interesting how changing the messaging and changing what you're selling can make a huge difference. So we've gone from getting, sort of negative comments to so many comments like this. It's so much fun reading these. Rob on our team sends them around every week. This site is friggin' awesome. And I think more than that, we love the comments where people talk about how this allows them to take control of their own lives. People say, I was scared to get my credit score, then I got it, and now I feel so much better, so much more confident for applying for a mortgage, applying to rent, or going for a job where they're going to check my credit. Not only that, but it's been such a viral product. You may not want to tell everybody, you might not want to tell all your friends that you've applied for a loan, even if you like the experience. We measure customer response through the Net Promoter tool, which many of you know. You ask someone, how likely would you be to recommend the product to a friend? We'd find people who give us 10 on 10 on the quality of service, but then give a low Net Promoter score because they're embarrassed to recommend a loan product to a friend. Whereas with free credit score, it's viral in nature. Like, what could be more helpful than recommending to your family or to your friends a way to get your credit score for free? So the lesson that I want to sort of leave you with, one that we think has been really powerful in the success of our free credit score offering, is to give before you get. And talking about how this has worked for us so far, we launched this in June. We have over 100,000 Canadians signed up for this today, and it's growing by hundreds and hundreds of people every day. So we're very, very excited about the success of this. We think it's truly a mass market fintech product that none of the large financial institutions in Canada offer. And we're very excited about what the future holds. Not only because it allows us to start a conversation with a consumer, but also because, as you can imagine, some percentage of people who have a good credit score will then take a loan with us. They'll say, I didn't know about you, but now that I know about you, I got my credit score, I'll take a loan with you. And we don't even bother presenting a loan offer to someone who scored that wouldn't qualify for our product. Why put someone through that? So it's become a really excellent acquisition tool for us as well. So final words from me: give before you get, and go get your credit score from us if you haven't already. Thanks very much. Questions? Okay, I can take questions, I'm told.
Hi there. Are you available throughout Canada, and what has your been experience dealing with the regulatory bodies?
So you can get your credit score in any province in Canada other than Quebec, and we hope to be on the lending side of it, any provinces other than Quebec and Saskatchewan, which has its own sort of different lending rules. In terms of dealing with regulators, I think we've taken a very careful approach to how we're structured. I think one of the realities of fintech is you have to be especially careful of how you deal with regulation, and we spent a bunch of money on smart lawyers when we set ourselves up to make sure that we were compliant with regulations.
Thanks. Great short presentation. I had a question about the economics of providing those credit scores. Can you speak to justifying the cost for Equifax and the impact to your bottom line?
Yeah, so we do pay, when you get your credit score from us, that's an expense for us. We have a relationship with Equifax. You know, we've already seen a lot of revenue come from this because a certain percentage of people do turn around and take loans. But we think there's huge potential to generate revenue in other ways because we know through your credit score, you know, that gives us a great opportunity then to tell you about other products, be they Borrowell products or products from third parties. And we think we're very excited about the opportunities that we have that will roll out in the coming months to provide additional services to consumers. Sure.
Yeah. So for your first slide, you actually were saying that you connect from borrowers to lenders, but your presentation mainly just concentrated on. So if you have lenders who are interested, would that also, or is that something only for borrowers?
So we do connect lenders with borrowers. At this point, because of the regulatory environment in Canada, we have a very small number of lenders. We have 2 Schedule I banks, and we have a small number of family offices. So our minimum investment size is $1 million. Happy to talk about that with you if you're interested.
I was just thinking that if lenders, you're offering that as a service too. Let's say if somebody has like $10,000 that they want to get a better return on, right? So then they could actually register and put that funding on there, which they can capitalize on the borrowers.
So I would love to be able to do that. We can't do that today because of securities regulation as we see it. Yeah, so we don't do that today. I think the person with the mic is making decisions. Or, yeah, sure, go ahead.
I'm just curious about the success and return on lending. Have you experienced troubles with people not paying back their loans and so on?
Yeah, so we've certainly had a small number of loans not perform, and we do all the regular things that you'd expect a lender to do to recover money on behalf of our investors. The way we like to talk about it is, we're cautiously pleased with our results so far. We're too young of a portfolio to declare success, but it wouldn't be too early to have blown ourselves up, and that hasn't happened. So that's that's a victory so far.
Yeah, financial literacy, like personal finance management, seems like very low, even among the good, people with good credit score. And I think it's going to be a big factor in your business. How do you have plans to influence, to propose some products to increase personal finance literacy?
Yeah, I mean, I think financial literacy, in itself, is such sort of a boring term. I think for many people that's a turnoff. It shouldn't be, but it is. I think what's amazing about a score, it's so easy to be able to get it, and it's easy to sort of digest it. If we had said, hey, we're Borrowell, we offer financial education, we would have 100 people that came to our site. We say, look, we offer your credit score. It's one number. It's digestible. Come to our site and you get it. We have 100,000 people sign up. I think part of the answer, too, is gamification. So let's say you come to our site and your score is 700. What if we say, look, we're going to make you a special offer if you can get your score to 750 in the next 6 months. And here are 3 things you can do to increase your score. I think that's really exciting. It gives a lot of opportunity around offering product. And I think it then becomes a method for education, because someone will say, okay, well, if I want to raise my score, oh, I see, I got to make sure I pay all my bills on time. I got to make sure I consolidate some of my credit into a lower cost loan. Okay, I get it. That makes sense.
Hello, I want to ask, how do you control the credit risk for the clients, since you don't really have collect a lot of information from the client for improve their experience in banking? So how do you to control the credit risk?
So how do we control credit risk? Yeah, there's actually 2 different kinds of risk that we're really focused on when a consumer applies with us. The first is credit risk, so how likely is that consumer to pay us back? The second is fraud risk, so how do we know the person applying is actually who they say they are? And we think about those problems differently. Credit risk, we learn a lot about you through your credit file. So how well you've paid down debt in the past is the best predictor, we believe, of how likely you are to pay down debt in the future. So we get a lot of information. A credit file contains, between 1,000 and 2,000 different data points typically. So that tells us a lot about your credit experience. Fraud we think about very differently. Fraud, there's a lot of more sexy tools that we use to check that you are who you say you are. And unfortunately, I don't talk a lot about those because we never want bad people to know what we're doing. But there's a lot of bad people out there.
Last question.
Hi. From time to time, the credit bureaus will have incorrect information. So how do you deal with the possibility of a turn down or a bad credit rating that is actually inaccurate, and what mechanism do you have for your potential customers to actually, troubleshoot that?
So I think it's a great question. There certainly is error in credit reports, as there is in everything. I think being able to get your credit score for free is a great first step in that. If you think you've got great credit, you've never missed a payment, and you come to our site and find out you've got a really poor credit score, that's a great indication that you should then go and check out what your actual credit report is and make changes. So we think getting your score is an important first step in that process. Just before I leave the stage, the last thing I wanted to say is, we're always looking for smart people. We're always hiring. So if you're interested in what we're doing, please come talk to us. And I think we've got a very explicit goal as a company to really create a company that's diverse and balanced from a bunch of perspectives, including from gender perspectives. So we like to speak to people of all sorts and types. But we just want to say that we're working very hard to make sure that our workplace is great for men, women, and others. So that's really important to us and something we're working on, and probably something FinTech in general needs to work on as well. So thank you.